From market volatility, the lender's CFO strikes a bullish tone on the numbers. Welcome to the program, everybody. Then just minutes to go, seconds in fact, until the start of the European equity trading session for this Tuesday morning. And futures have been pointing quite decidedly to the upside. European futures point to the upside. US futures also point to the upside. And of course, we're waiting to get into election day good and proper. We have seen some very early results coming through from some very small voting districts, but essentially we are waiting for voters to go to the polls. That said, 100 million or so have already voted, and we know the story around early voting in the US. More on that in just a moment. So focusing in on the European equity markets, then futures have set our expectations high, perhaps. The IBEX is up by 0.8% as we get out of the gates this morning. The FTSE 100 up by 0.5%. So we are seeing a little bit of a continuation of yesterday's theme. Some of these markets, the CAC and the DAX in particular, were up by more than 2% in yesterday's session. So as we wait for the CAC and the DAX to open up, just keeping that in mind, although some of the markets have not made up for the losses of last week. I should point out we were down more than 5% in the S&P 500 during last week's session. So even with the gains of yesterday, we have, of course, not made up for all of those losses. So the FTSE 100 now up by 0.9%, the IBEX up 0.5%. European equity markets then broadly opening higher ahead of the American presidential election. President Trump and Democratic nominee Joe Biden have ended the race with last-ditch efforts to persuade voters in key states. Joining us now is Kathleen Hunter, our US politics editor, and the right person to get us ready for what is to come in the next 24 hours or so. Kathleen, what have been the closing arguments then that these candidates have been using?
Well, we saw Trump. He's just actually now just returning to the White House from his last campaign rally in Grand Rapids, Michigan. I think we saw him be a little bit reflective a little bit more reflective than we normally see. That's where he capped his campaign in 2016 as well. He was thankful to his supporters and to his family. Really made the strong case for his reelection, drawing a sharp contrast with Joe Biden. We heard similarly earlier in the evening from Biden himself. Essentially making the argument that he's made all along, that he is the candidate that can bring a return to decency, that he can set the U.S. back on the right course when it comes to the economy and to COVID. And so, I think that the one thing maybe the two candidates can agree on is that they are quite different and that America faces a pretty stark choice.
Indeed, and many of them have already made that choice. We've seen 100 million or so voters already casting their votes, haven't we, doing it early. What does the surge in this early voting tell us? Joe Biden seems to think, and some people have suggested, that early voting, the surge in early voting could give him some kind of lead. President Trump fighting back against that kind of narrative. What do we assess from the early voting trend?
Well, absolutely. We've already seen, I think it's close now to close to 3/4 of the number of Americans who voted in 2016 have already voted early. And so that's a pretty high number. Now, I think it's important to remember that we don't know exactly how high in-person turnout is going to be today, in a large part because of the continued coronavirus pandemic. I think that, there is the possibility that voter turnout isn't quite as high as we think, but I think that, there are a lot of indications that overall voter turnout in this election is going to be much higher than 2016. I think that there are also, part of why we see Democrats being optimistic about that is that there is some indication. Obviously, we don't know how people vote when they enter the voting booth or when they fill out their ballot, but there is some indication from certain states of what the party affiliation is of the people who request early ballots. And in certain states, there's some indication that Democrats are requesting the early ballots at a much higher rate than Republicans. So there's a sense that that could translate into support for Joe Biden as opposed to Donald Trump. And I think that's why we're seeing, Trump trying to sow some doubt about the legitimacy of those early ballots. And so we would expect that to continue. And there's there's the big question kind of hanging out here is whether we're going to know the outcome tonight at all or whether this is going to drag out for several days.
Kathleen, thanks very much. Kathleen Hunter joining us there, US politics editor for Bloomberg. Thanks very much for speaking to us. A busy time, of course, on the US politics front. We'll keep you across it from many angles. From the politics to the market reaction, let's get now to Emmanuel Cao, Barclays head of European equity strategy. Very well placed, of course, to get us ready for what we could expect over coming days. Emmanuel, good to speak to you. What kind of, for European equity markets, what should we be watching for in terms of the election outcome? Is there a particular outcome that would be better for European stocks?
Well, good morning. I think for any kind of market, there's a key in the very short term is to have visibility and clarity on who will be the next president. So I think the market have been worrying for some time about the dispute outcome, which means that we will not know.
Good morning, everybody. Welcome to SG Trader Live Trading channel. As you can see right now, I'm going to place a stop on profit for euro from our ticker. We have two positions open at 116.79 and 116.34. So I will just place early morning stop on profit from position 116.34. This is position when we opened yesterday. It was for that. I will place stop on profit at 116.54. It's good to hold sometimes, once in a while, position overnight, even if you day trading, because who cares? As long as you make a profit, yeah. Will you sell it in a few minutes or will you sell it next day? You need to make profit, not to trade like 50 trades a day or 10 trades a day just to make a target. The target is to make a profit, yeah? Okay, let's see. If it's going down, we'll execute at this price and we'll collect profit. And if it will go up, I will change my stop on profit for, we will see what price. Speak to you later, guys.
View that Dem sweep or Democrat administration might be able to provide a stronger stimulus to the US economy that would benefit the world. So we've seen yields moving higher, we've seen the yield curve steepening on the back of this reflationary expectation, and that's probably why we've seen within the equity market some rotation away from sectors which have benefited from uncertainty on the other hand, but also from falling yields and this kind of deflationary mindset toward the sectors which have been lagging during this recovery trade over the last few months and which could benefit from reducing uncertainty and improving growth expectations. So financials, for example, have performed very well last month at the expense of tech. So we are seeing some early rotation in the market internals, showing that the market is starting to position for improving visibility and a bit more reflationary environment. So yes, I think if we have clarity on the political front and on top of that more likelihood of fiscal stimulus being provided fairly soon to the US, I think that could help sentiment on the market, but more importantly, provide a bit more support to this nascent rotation that we are seeing away from growth towards value and financials.
Yeah, Emmanuel, is the reflation trade materially different for you under Joe Biden versus President Trump? Or is it just about getting some sort of positioning in the Senate that can get a fiscal deal passed?
Well, I guess, it would be easier for the new president to pass a strong stimulus and fairly quickly if he has a parliament on his side, right? That's why I think a damn sweep would probably be the most favorable outcome from a fiscal standpoint in the short term, because the new president will have ability to pass a new fiscal deal fairly quickly. And given the macro environment, the uncertainty with COVID, etc., I think we need to see that there is this ability from the government to deploy fiscal stimulus if needed, right? So again, from a European standpoint, we are a bit behind this reflation trade, because we've seen the second wave obviously coming back, and at the same time the progress on the recovery fund is quite slow in Europe, and that's why if the US has more ability to provide further stimulus down the road, I think that would be well received by some part of the market, and again, value financial could reflect this growing reflationary expectation basically coming from the US.
Okay, thanks very much, Emmanuel. Stay with us. Emmanuel Cao, Barclays head of European equity strategy. We'll get further thoughts from him on the earnings season and the banking sector. Perhaps he likes some of the stocks in that sector, BNP Paribas in particular, bouncing back with a big jump in FIC revenue. I can tell you that the stock is currently trading to the upside. The BNP share price is up by 4.4%. We discuss European earnings next. This is Bloomberg.
If we now look at the 2020 dividends, so the dividends over the result of 2020, those we have been considering that 50% of that, which is our normal payout ratio, we have put aside for dividend to be paid in 2021. Of course, also there we have to wait for what the authorities will do, but that is what we continue to provide for.
That was the BNP Paribas CFO speaking after the French lender saw a surge in FIC trading, so fixed income, commodities and currency trading. It beat estimates following lower than expected provisions. The stock is trading 4.8 6% to the upside this morning. Emmanuel Cao, Barclays head of European equity strategy, is still with us. And looking at the financial services sector, Emmanuel, or looking at banks in particular, we saw so much provisioning and nervousness, I suppose, around the first half of the year, and perhaps some of that was overdone, so banks were well placed going into the third quarter, perhaps. How does that leave them set up, European banks, to weather the winter storm?
I mean, clearly the reporting season for Q3 has been a relief for the sector. I think there was a lot of concern about the level of provisioning, as you said, and Q3 was a very strong quarter for the global economy. The credit shock has been shallower as well, with a lot of support from central banks, government mitigating the shock to the credit system. So yes, we've seen banks in a position to reduce provisioning more than expected in Q3. And at the end of the day, earnings have been growing for many of them. So I think the sector is in a much better shape than it was 12 years ago during the crisis, both in terms of ability to operate under stress condition from a capital and balance sheet standpoint as well. And we've been advising to position in the sector into the reporting season, because we think the market was missing this improving risk reward with very, very cheap valuation, extremely underweight investor position, and at the same time improving profitability, right? So of course there are a lot of challenges facing the sector into next year with lower for longer rates and uncertainty about their ability to restore dividends. But we think the sector deserves to be rated and is ultimately a very cheap option on a more sustained recovery. So we like banks, and we think they are part of what should be a well-diversified portfolio, because their asymmetry to the upside is something which we find quite attractive, given that many sectors which should benefit from the recovery have already performed and are trading on quite expensive valuations.
We see some dollar weakness today. In fact, we see a sort of classic risk-on picture, don't we, in markets, Emmanuel, with money going into risk assets and money coming out of some of these havens, such as the dollar. And I'm interested in how this has implications, dollar weakness, how that has implications for investment strategy, because I know that you're bullish on commodities and mining. Clearly, the Chinese growth story is something to cling to there, but also the dollar has a role to play. What are your thoughts?
Well, I mean, firstly, I think what we are seeing today and maybe yesterday is a bit of reversal of the risk-off that we saw in the last few days. So there's a bit of relief in the market, rightly or wrongly, into the U.S. election. But yes, I think a dollar weakness is a typical feature of this of what we call the reflation trade, and ultimately weaker dollar should be reflationary for the rest of the world through the commodity support. And we had obviously on one hand a very strong Chinese economy at the moment. We saw again very strong data over the weekend. So China is somewhat driving this global reflationary dynamics, which helps commodities, but also the weaker dollar is something which helps this trade. So we like miners, given that they are still relatively cheap and they give us some exposure to the weaker dollar and the Chinese strength. I also think that some more laggards like energy could start to look interesting. I mean, we've been underweight energy for many months, but we closed underweight last month. I mean, we think the valuation are very, very cheap, and if the recovery were to carry on and the dollar were to remain under pressure, ultimately the energy sector should be supported as well, and has clearly not participated in this recovery trend so far.
But a lot of people are focused, of course, we're all focused as a global society on the race for a vaccine, Emmanuel. But how much do you think that the vaccine story benefits the pharmaceutical sector? How do you position around the pharma sector as we wait for news on that to drop?
I mean, we are underweight the healthcare sector, partly because we think it's not the kind of sector you want to own in this recovery environment. We have a bit more of a barbell approach in our location. We reduced some of the sectoral exposure we had into Q4, given the strong performance of the group, but we kept underweight on some of the defensive, which don't really have strong catalysts, and healthcare is one of them. Of course, the vaccine news would be great, for sentiment, but we think the rest of the market will benefit the most from that, right? So sectors that have been hurt by the restriction, by the lockdowns, will be the main beneficiaries, in our view, of mass vaccination in H1 next year. So I'm not sure the sector is the best way to play a vaccine announcement. I think a more cyclical part of the market, which had been hurt by the restriction, by the lockdown, are the more beneficiaries from the potential for the economy to reopen more sustainably into the next year. And of course, there's an element of uncertainty with the US election as well. And, I think if we were to see a Democrat administration, that might weigh on sentiment for one sector, which could be impacted by tighter regulation as well in the US.
Yeah, we'll be back to talking about drug pricing. Emmanuel, thank you very much. Thanks for joining us. Emmanuel Cao, Barclays Head of European Equity Strategy. Emmanuel will be continuing his conversation with me on Bloomberg Radio. That's at 9 a.m. UK time. Let's get a Bloomberg Business Flash. For that, here in London is Laura Wright.
Thanks, Anna. Bayer is increasing the expected cost of handling future Roundup lawsuits to $2 billion. The firm has failed to meet a court deadline to settle outstanding US cases. Bayer earnings missed estimates with the pandemic curbing demand for agriculture and pharma products. Saudi Aramco is maintaining its dividend despite not generating enough cash to cover the payout. The oil giant's profit has slumped 45%, but the stock has been bolstered by the firm's insistence it will pay the $75 billion dividend. Almost all of it will go to the Saudi government. Twitter CEO Jack Dorsey is staying in his role. That's after a board committee reviewed the social network's leadership. It was part of an agreement with activist investor Elliott and private equity firm Silver Lake. They concluded the current management structure is, in fact, sufficient. That's your Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Coming up on the programme, with the US election on the horizon, what do the results mean for European assets? We'll get further analysis of that theme next. This is Bloomberg.
Almost 100 million have voted so far. 100 million voted already. And more are going to vote today.
A vote for Biden is a vote to eradicate your auto industry.
My message is simple. The power to change the country is in your hands. Tomorrow, we can put an end to a president who has fanned the flames of hate all across this country.
I'm running against a very sleepy guy. We can't let the sleepy guy fool us, though, because he happens to be a corrupt politician.
It's time for Donald Trump to pack his bags and go home.
This election comes down to a very simple choice. Do you want to be ruled by the corrupt and selfless political maniacs that you're dealing with, or do you want to be ruled by the American people?
US presidential candidates making their final pitches to voters as we head into election day. Now, after equities staged a rebound yesterday, market watchers remain on edge ahead of the US election. A contested election may be one of the biggest risks for American assets. But what will the results mean for Europe, for European stocks, European assets, European politics? Here to look at that is Danny Berger. Danny, if the election does end up being contested, how big a risk is that for Europe?
Well, the thing with a contested election, if the fear, of course, is being that a stimulus is delayed or even a Biden win in a Republican Congress, if that's the fear for the U.S. market, that's less of a concern for Europe. And that's because any delay in stimulus, the fallout is not as severe in Europe because the U.S. economy is relatively closed, which means that Europe can somewhat handle the repercussions of not getting that stimulus from across the way. Really, though, the danger is in a spillover of asset volatility in the foreign exchange space. That's what really poses the bigger threat to Europe. The other source of volatility, though, I should say for Europe, is a Trump win. According to Bloomberg Economics, if you were to price in the tariffs that he's talked about but hasn't placed on Europe, it would be about 0.5% of GDP for the euro area that would have to be priced out. So that might be one reaction we could see, and really assets not really discounting much of a Trump win at the moment.
Yeah, really interesting piece by our colleagues at Bloomberg Economics, Danny, talking about the impact on trade, also talking about other policy choices or implications of the election to do with Russia, to do with climate change, the fiscal spending, of course. Are there any signs that European assets are pricing any outcome in either direction? Of course, we've talked a lot about the market's expectations around a blue wave, but what do we look at when it comes to European assets?
Well, one way in general is just the rally we're seeing in European assets today. I think it's pretty remarkable that people are willing to jump in and buy ahead of the U.S. election. As one strategist put it to me, everybody is now just waxing their surfboards, getting ready to ride the blue wave. In some ways, you can look at also the difference between European core bonds and U.S. 10-year yields. We were looking at that spread earlier. It's the widest when it comes to U.S. 10-year and bonds since March. That's a trend that could continue should there be a lot of stimulus. But either way, look, if we are pricing in a blue wave, there are need to be things that change in terms of European assets. Should there be greater regulation on tech, Emmanuel was talking about this last block, you could see some of those tech assets in Europe have to cope with higher corporate tax rates. At the same time, less protectionist trade policies could also benefit some of the more cyclical in value names. That is some action we have been seeing, though it might be more related to momentum selling off than value doing well. But some changes might need to be priced in here, Anna.
Danny, thanks very much. Danny Berger with a look at things to watch in Europe. And let's have a look at some of the things that Danny was talking about there. Dollar weakness coming through today. We have a risk-on session essentially taking place. Dollar weakness, our technical friends tell us it's dropped below its 55-day moving average. The US 10-year yield has been moving to the upside. That's also clear to see. We haven't seen, we do see now. I take that back. We do see now NYMEX prices or oil prices going higher. They've been missing out on the rally, but now not the case. US futures point to the upside. Don't miss our coverage of the election starting at midnight London time. We'll be across the United States, of course. This is Bloomberg. Welcome back to the European market open. 30 minutes into a trading session that's increasingly positive, increasingly risk on. We see the dollar under pressure. We see yields going higher on US Treasuries. We see stocks in fashion, stocks in vogue on election day, up by 1.2%, as you can see on the stocks 600 this morning. It's a sort of classic risk on picture in terms of the sectors that we're seeing moving to the upside, cyclicals outperforming. Let's get to some of your movers. We see, talking of some of the classic risk on moves, BNP is leading the charge for the banking sector, up by just shy of 6%. FIC revenue, once again, part of the story there, so managing to trade their way into better territory, safer territory over at BNP. Bayer, that stock down by 1.5%. They've increased the cost estimate of the Roundup cases, of dealing with the Roundup legal battles that they're facing stateside. As a result, we see that stock under pressure. And really interesting themes coming out of IWG. This is a temporary office space business, and they missed on revenue, but some of the analysts saying costs and cash flow look fairly strong. They're also talking about strength in their suburban offering versus the city centre offering. It's that kind of move out of the city into the suburbs, into rural areas perhaps, that benefits Crest Nicholson in the construction space as well. That's another stock moving to the upside. So some interesting themes coming through in real estate this morning. Let's get a Bloomberg First Word News update for you. Here's Laura Wright.
Thanks, Anna. It's election day in the US. The latest polls show Democratic nominee Joe Biden is leading President Donald Trump nationally, as well as in some key states. The Biden campaign says the surge in early voting will help the Democrats, but Trump's team argues voters heading to the ballot box today can easily wipe out that early advantage. As well as nearly 100 million early ballots, a few voters have already voted on election day. Some towns in New Hampshire have a tradition of voting at midnight, including Dixville Notch. It was a big win for Joe Biden in the town, getting all 5 votes. Millsfield to the south was a victory for President Trump with 16 votes. A shooting in Vienna last night, killing 3 and injuring around 15. Police shot dead one of the gunmen. It wasn't immediately clear if he was acting alone or with others. Chancellor Sebastian Kurz called it a despicable terror attack, with the Interior Minister saying the shooter was a supporter of Islamic State. OPEC Plus is inching closer to delaying its January output hike. Russia is actively discussing keeping its current curbs for an extra 3 months as oil markets weaken. The group has been dropping hints for weeks that its plan to add almost 2 million barrels a day may not be such a good idea. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura Wright, here in London. Let's focus in on the battle against coronavirus. COVID cases are surging across Europe. France reported record daily cases, and Italy announced new measures to limit the spread of the virus. In Britain, Prime Minister Boris Johnson unveiled plans for whole cities to be tested to root out asymptomatic carriers. Joining us now from Brussels is Bloomberg's Maria Tadeo. Maria, good morning. Europe's finance minister then are going to be meeting virtually today. They have this as the backdrop, don't they? They have this fight against coronavirus to deal with, and the ever-changing, the ever-worsening situation, it seems, as East as we head into the winter. How downbeat do we think they're going to sound?
Yes, Anna, so they have to worry about the lack of progress that is being made on the recovery fund and the European budget. They also worry about the fact that we really don't have a clear picture, a timeline in terms of where the pandemic goes from here. And they also worry about the fact that Europe is going back into lockdown. We saw the German lockdown go into effect yesterday. We saw the French one going into effect last week. And there's a lot of speculation about Italy and Spain also going potentially to a national lockdown. That is the 4 biggest economies in the euro area. So clearly there's a lot on their plate today. There are 2 major issues, however, that will really concentrate and focus the discussion today. One has to do with those projections, those key economic forecasts for this year and next. Now, remember, European finance ministers were hopeful that we could see a continuation of that rebound we saw in the 3rd quarter extending into the 4th quarter. But of course, that is probably not going to happen now. The debate is whether a double-dip recession is coming to Europe. And then secondly, very much pegged to that, is the talk around stimulus. Is it enough? Do we need to see more? Perhaps the recovery fund, does it need more firepower? But also the idea that we have made progress, but it's not being implemented. Finance ministers want to see that recovery fund being put to work, being made available by 2021. There has been a lot of back and forth between the different institutions here in Brussels. The idea, the hope at this point is that they will get to some agreement over the European budget that then unlocks the recovery fund, which is so market sensitive, but also so crucial for countries like Italy and Spain.
Interesting to see the ECB's Governing Council member Klaus Knott saying the EU needs to develop additional funding mechanisms to support the economic recovery, giving his thoughts on the EU Recovery Fund and how it should be temporary. With that in mind, Maria, do we have any progress on approving actually the size and scope of this fund and the conditions that are attached?
Yes, Anna, there's a lot of back and forth on this because in principle the recovery fund was approved in the summer, and that is already should almost be a reality, I would say, but it's also linked to the rest of the European budget, so nothing is agreed until all of the elements have been agreed. Now, yesterday there was a meeting between Ursula von der Leyen, Angela Merkel too, because Germany is holding the rotating presidency of the European Union and the head of the European Parliament. Now, nobody wants to take the blame for this, and we do get a sense that talks have been reinvigorated by the coronavirus. It would be very difficult to explain to citizens and to explain to voters across Europe that we're not ready to put to work money that is so badly needed for some countries because of political disagreements. So to some extent, if there's anything positive, any upside coming from what's been a very difficult week for the European Union, is that pressure now piling on the European Parliament to give the okay to this European budget and then unlock the European Recovery Fund.
Thanks, Maria. Maria Tadeo joining us there from Brussels with a look at how European finance ministers continue to tackle the coronavirus, of course, and its effects on the economy. Let's focus in on what's going on markets. Election day, it seems investors are trying to anticipate what they might see as the result coming through here. The Stoxx 600 looking fairly buoyant on a day where we're waiting for such big news flow. So the Stoxx 600 up by 1.2%, the FTSE up by 1.6%, the CAC 40 getting the best of the gains of the majors, up by 1.5% this morning. So we do see some substantial movement coming through there. In terms of elsewhere, the FX market is really interesting to look at. We do see the pound a little stronger, up 0.3%, but we also see the euro stronger. It's very much a dollar weakness story, so it's risk on, dollar weakness. That seems to be part of the theme. So the dollar index down by around 0.4%. Gold, though, keeping calm, reserving judgment, perhaps. There we go, another focus on the dollar, as we do seem to be making such movement on that particular front. We talked to a lot of guests about whether they see dollar weakness continuing. Is this a bet on further fiscal stimulus to come? That's part of the conversation, or is it more short-lived than that? But that's the focus for markets in terms of the dollar as we head into the US election. Up next on the program, SAP exclusive, our interview with the CEO, Christian Klein, after a rough week for the software maker out of Germany. This is Bloomberg.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
outlook that we had adjusted in April assumed that over the course of the second half year, we would see a gradual improvement in the demand environment due to lockdowns easing. Unfortunately, the opposite is starting to happen.
It's a year that none of us could have possibly expected. And in technology, every company is going through a massive digital transformation, and that transformation is accelerating. And SAP's troubles, I think, are unique to them.
The CEO of Salesforce there, quick to put distance between his own company and SAP after the German software giant slumped 20% after reporting earnings last week. Since then, SAP has continued its slide, sinking to its lowest level since the 19th of March. But speaking with Bloomberg's Emily Chang in an exclusive interview, the CEO of SAP, Christian Klein, said the company was at an inflection point, trying to put a more positive spin on slowing revenue growth. Klein said more clients were transitioning to the cloud.
We want to invest now. We want to invest into R&D. We want to invest into the co-innovation with our customers because they need us now. And tech is a key enabler to really come out stronger of the crisis.
Right. But SAP shares, which had been rising going into this, have now plummeted almost 30%, wiping tens of billions of dollars off your market cap. How can investors have confidence after such a massive blow?
I mean, you know, again, Emily, as I mentioned, I mean, we had a guidance out there who has foreseen higher growth in on-prem. And now I don't want to trade the success of our customers, you know, by forcing them to buy more on-premise software while they want to move to the cloud. And SAP can enable the move to the cloud, can shift these very mission-critical ERP workloads to the cloud. So this is why we are now shifting parts of our guidance, you know, less on-prem and more cloud. We will accelerate the growth in the cloud even more. And when you look at our Q3 numbers, I mean, many said, yeah, why is cloud revenue only 14%? Actually, our cloud revenue was up 26%. And with that, above the level of our competitors, if you exclude our travel and expense solution, Concur. And who can blame Concur in this crisis, you know, for not growing their business? And this is only a matter of time after COVID when also this business will bounce back. So I'm extremely confident that we're going to even accelerate our growth in the cloud in the years to come.
Now, Salesforce CEO Mark Benioff rejected the idea that this was some sort of bad omen for the rest of the tech industry. He said that you are still going through a CEO transition. You've not navigated the transition to the cloud well. How do you respond to that? Like, I'm curious, do you think companies like Salesforce, like Oracle, also need to worry about the forecast ahead?
I mean, Mark and I met last time in Davos, and actually we had a very friendly conversation. And, you know, I don't want to talk so much about our competitors today. And what we are focused on is on the success of our customers. And in CRM, actually, we have seen high growth in Q3. I mean, we are the market leader for commerce, and the growth is skyrocketing. And now we are also focusing on making, you know, the connection work between the front office and the supply chain. This is what we are focused on. But of course, I wish also Mark all the best.
Do you think this is accelerating a shift away from on-premise permanently?
Absolutely. I mean, this is part why we changed the guidance. I mean, our guidance has foreseen, you know, decent performance on our on-premise revenue business. And look, I mean, I also talked to many of the investors. While they were disappointed about, you know, the short-term change of our guidance, everyone said, Christian, this is the right thing to do. Because the cloud is the way to go. And this is what makes SAP successful, especially on the mid and the long term. So everyone was very happy about that. We have 200,000 customers only in the US. Not one single customer reached out to me and complained. Everyone actually reached out to me and said, Christian, thanks. Thanks for listening to us. Thanks for moving us to the cloud. And thanks for co-innovating. And in the US, we have many R&D labs. And now we are going to hire new engineers. We want to invest. We want to reinvent how businesses run. I mean, Emily, there is no other software company provider in the world who can really make this transformation for our customers work.
So speaking of the U.S., you have an interesting outsider's vantage point from Germany. We are heading into a crucial election here. This could be the most volatile week for the markets all year. Beyond that, how does whether it's Biden or Trump in the White House impact your outlook?
Look, I mean, I'm a German, so I will be a close observer tomorrow. All what I can say is actually that the United States were always a great partner for Europe and also for SAP. And, you know, all what I can say, I wish the country all the best for tomorrow.
That was the SAP CEO, Christian Klein, speaking exclusively with Bloomberg's Emily Chang. Really interesting insight into market dynamics there and the rivalry between those businesses perhaps as well. Let's just check in on a couple of market movers for you. I want to show you what's going on with the oil price, also what's going on in currency markets. It's election day, and we do see quite a big move into risk assets, despite the fact we're still waiting for this big uncertainty to be cleared out of the way, if you like, in terms of the election result. Oil looked a little sluggish earlier on this morning, but now has been gaining momentum. Certainly in the last half hour, things have picked up, and you see NYMEX up by nearly 2% now, 37.54. The Brent price also stronger. Part of this has to do with the weakness in the dollar. The dollar has been increasingly weak as we've gone through the session, the euro and the pound both bouncing as the other side of that trade, if you like. Part of the underlying story, though, coming through from the oil markets itself is the same as yesterday. On Monday, we saw Energy Minister Alexander Novak over in Russia meeting with Russian producers to discuss delaying and easing of production cuts by 3 months. So if they ease that, what does that do to supply? And that's why we see oil prices moving to the upside today, as perhaps there is a bit of a delay in bringing back some of that delayed Russian production. Let's get a Bloomberg Business Flash for you now. Here's Laura Wright.
Thanks, Anna. BNP Paribas is benefiting from volatile markets. Its debt and equity trading beat estimates, with the lender joining European peers in posting lower than expected provisions for bad loans. It's bouncing back more quickly than its French rivals. BNP is placing 50% of its profits in reserve for a 2020 payout. PayPal shares are sliding after the payments company lowered its revenue forecast. It says growth in new accounts slowed in the third quarter. That's after strong pace in the first 6 months of the year. The company has been a big winner in the pandemic, with its shares surging more than 70% before the latest earnings. Apple's 15-year relationship with Intel will officially begin to unwind next week. The tech giant is revealing its new Mac computers with processors designed by Apple for the first time. The firm and its suppliers are ramping up production of the new Mac laptops. Beyond the new processor, the devices will not have significant changes. That's your Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright, here in London with your Business Flash. Coming up, which assets are set to move the most on election results? We see a great deal of movement already. We'll put that question to the Market Live blog's Christine Aquino. She joins us next. This is Bloomberg.
how you guys feeling? I come here to say, MAGA 2020. Don't forget that.
Now is your chance to vote against Donald Trump.
Do not vote for Sleepy Joe at all.
Vote for Joe. He's a good person. Now is the time to show up and vote like this country depends on it, because it does.
Celebrities endorsing US presidential candidates on the last day of campaigning. That was the last day of campaigning. Today is the election itself. Don't miss our coverage of the election starting at midnight London time. We'll be live from across the United States with the latest and all of the market action. Of course, that's when the special starts, but even leading up to that, we'll have plenty of coverage of how the markets are positioning ahead of this election stateside. Christine Aquino joins us now from a Markets Live team here in Europe with perspective on that, because Christine, you'd be forgiven for thinking that this was the day after the election. The amount of movement we're seeing in assets generally, it's as if the markets are trying to front run this slightly.
Absolutely, Anna, and that is the nature of markets, isn't it? They always try to front run and look forward to what's next. And at the moment, we're seeing a lot of action in FX in particular, and that's being led really by a broad decline in the dollar and lifting a lot of these pairs here, both in G10 and EM. And remember, the weak dollar is one of the post-election trades that we were looking at in the event of a blue wave. And so you could argue that perhaps investors are anticipating that and making it really clear, particularly in dollar weakness this morning.
Yeah, let's focus on the dollar then, Christine. We're seeing a great deal of dollar weakness this morning. Is this because the markets are thinking, if the polls are right, and these are national polls, that doesn't tell us what we need to know about the convention, of course, but if the polls are right, and if Joe Biden is victorious here, then there's more fiscal stimulus. If he does well in the Senate, then that means there's more fiscal stimulus, and that is going to weigh on the dollar. Is that what is moving the greenback this morning?
Yeah, that would certainly be a logical sequence of events, Anna. I think prior to the election today, a lot of the base case scenarios when it came to the market implications of a blue wave and a Biden presidency would be a weaker dollar for the reasons that you outlined, expectations of fiscal stimulus and just in general the lack of uncertainty stemming from Democrat presidency and Congress would curtail a lot of the haven demand that the dollar has enjoyed for much of October. And so that is the kind of logic there as far as investors' base case goes. And we're seeing dollar weakness play out this morning, and that probably speaks volumes in terms of market expectations right now.
Christine, we started the week with some real weakness in oil prices. Today, well, the latter part of yesterday and into today, we see some uptick. We're sort of flirting with $40 a barrel now on Brent. 39.63 is where we trade. Clearly, there's an FX role here, so whatever the dollar is doing, that has a role to play. We keep an eye on the supply side and what's going on there. But climate policy could be the way that this links into the election. What are we hearing about where commodities head as a result of the election outcome?
Yeah, I think in the first instance, I would expect that probably commodities, and this is what we're hearing as well from our strategists on M Live, is that they will probably move in line with broader risk assets. I think there would be kind of a concerted reaction across all asset classes, whether it's oil, commodities, FX, or equities, in the immediate aftermath of the election. And then probably when the dust settles in the weeks and months following that, then investors will start differentiating, okay, what does whatever configuration of the White House plus the U.S. Congress really mean for these various asset classes? As you say, for commodities and oil, it really will boil down to climate policy and what whomever the president ends up being decides is the future for America's energy. But that will be something that will play out over years. As we all know, these sorts of policies will take months and months of debate in Congress, and then some more time to ratify. So that will it's a story for over the next few years, I would think.
Christine, yeah, absolutely. We all know from 2016 that the market response we see, the market reaction we see on the day of the results coming through, if we get all of the results through tomorrow, that doesn't necessarily tell us where things head over the longer term. There was a lot of volatility this time 4 years ago. Let's not forget. Christine, thanks so much. Christine Aquino, who leads our Markets Live team here in Europe. That is it for the European Market Open. Stay with Bloomberg TV. Surveillance is up next. Stay tuned for all our election coverage, of course. Starting at midnight London time, we'll deep dive into the politics story, but running up to that, we'll continue to track how risk assets are performing. As you can see here, we are moving to the upside on equities. This is Bloomberg.
Markets bullish on U.S. Election Day. Almost 100 million Americans have voted already, and turnout is expected to challenge historic records. Euro area finance ministers discuss COVID-19 as France sees record cases. Italy lays out fresh plans to halt the spread. Chancellor Merkel urges people to follow the rules. And the corporates coming thick and fast. BNP paints an optimistic picture despite the pandemic, but S&P says the virus is an inflection point for clients. Well, good morning, everyone, and happy U.S. Election Day. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we track the markets, and of course, we track policy. We look at state by state the difference between Joe Biden and Donald Trump to try and figure out exactly what will happen overnight. What's very clear in the markets is that we're getting quite a lot of volatility. Now, volatility spurred on because there's concern that there will be civil unrest if certain votes aren't counted. There's a concern out there in the press that actually we could also see civil unrest if the candidates of whoever doesn't win actually sees people go out in the street. Stock markets are climbing globally for a second day. But again, it's the American presidential election day, and so currency traders are really taking the brunt also for this increased volatility. I spoke to one senior banker yesterday, very senior banker, saying that actually in terms of the trading floor, they're going to have almost pretty much full staff overnight to see what happens. And when I asked about havens, it's very difficult, he said, to see what would constitute a haven. Maybe we'd have to go to cash. You can see the VIX not so elevated at the moment, but we did see a bit of elevation earlier on, and then pound dollar 129.78. So for the moment, we're really looking at some of the currencies. Now let's get straight to the Bloomberg First Word News. Here in London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Over in the US, as well as nearly 100 million early ballots, so few voters have already voted on Election Day. Some towns in New Hampshire have a traditional voting at midnight, including Dixville Notch. It was a big win for Joe Biden in the town, getting all 5 votes. Millsfield to the south was a victory for President Trump with 16 of the 21 votes. Now, Twitter says it will not let election candidates claim victory themselves. It will require certain tweets declaring a winner to be cited their sources, be that to national news outlets or state officials. That includes tweets from the candidates, posts that go viral, and accounts with a lot of followers. Tweets that don't follow the guidelines will be flagged with a warning. A shooting in Vienna last night has killed 3 people and injured around 15. Police shot dead one of the gunmen. It wasn't immediately clear if he was acting alone or with others. Chancellor Sebastian Kurz has called it a despicable terror attack, with the Interior Minister saying the shooter was a supporter of Islamic State. And here in the UK, Prime Minister Boris Johnson says there's no alternative to imposing a lockdown. He's revealing plans for whole cities to be tested to root out asymptomatic cases of the disease. The virus is continuing its surge across the US, with cases soaring in key battleground states. France has reported a record in daily cases. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, it's finally here as President Trump and Democratic nominee Joe Biden conclude a last-minute blitz of campaigning in critical states. Almost 100 million Americans have already cast their ballots. Now, Biden currently leads nationally in the polls, with one of the latest putting him ahead of the Trump in the battleground states of Ohio and Florida. Now, later in the program, we'll also discuss what the election means for investors. But first, let's focus on America's relationship with its allies. Now, our first guest was British ambassador to the United States for 4 years of President Obama's tenure. He's now a senior advisor to Chatham House. Welcome to Surveillance, Peter Westmacott. Ambassador Westmacott, when you look at the volatility in the markets, and really everyone's quite excited that it's U.S. election day, are we betting too much that it's almost a given that Joe Biden wins this? Because we're talking about national polls, but actually if you look at the dynamics of the Electoral College, it could be a different outcome.
Well, good morning, Francine. Thanks for having me on. Are we betting on a Biden victory? I would say that most people who are watching this closely in Britain, which is an awful lot of people because we're always obsessed by American elections, would be quite nervous about the actual result, because although the national polls, as you say, give Joe Biden a pretty healthy lead and they've been constant for many months now, the fact remains that in some of those battleground states, it is quite tight. It may even be within the margin of error. There are issues about whether votes will be counted. There are issues potentially about voters being discouraged from turning up on the day. And he sprung surprises on us before, as all the people in the Democratic side are acutely aware. That said, if you look at the favorability ratings, you look at the polling, you look at the battleground states, it ought to be a Biden victory. But I don't know anybody here in the United Kingdom who's watching closely who's taking that to the bank. We're all waiting to see what happens.
Peter, what are the swing states that you're looking for? And what happens actually if we don't have a clear outcome? Do you worry about civil unrest in the U.S.?
On your first question, Francine, I think we'd love to have an early result, wouldn't we? So people will be watching carefully what happens in Florida, which is going to be presumably, as usual, very close. but he's likely to give us a result possibly as early as the early hours of tomorrow morning. Texas would be an extraordinary win, probably not going to happen, but who knows? It's become a toss-up, which nobody would have expected, and we will hear a result from Texas pretty soon. There's Arizona, which tends to give an early result. But of course, the other really key state in the three Midwest states that Trump won somewhat unexpectedly, Michigan, Wisconsin, and Pennsylvania. Pennsylvania, the most important one, and nobody really expects to get a result on that until later in the week, it seems to me. But what am I? No expert on that. So I think we're watching for the interesting ones. We're watching for the ones that will give us an early result, I think would be the most interesting thing. The second half of your question, I've forgotten.
Mr. Westmacott, when you look at... All right, let me ask you again. When you look at some of the things that we should be worried about, and this was civil unrest, does it change the dynamic between the UK and the US depending on who's at the White House? If there's a Biden presidency, does it mean that Boris Johnson will most likely have to wait for a trade deal?
I think on civil unrest, we share the same concerns that many people in America do. We're worried to see people boarding up their shops. We're worried to see some of the encouragement of militias to take the law almost into their own hands and to supervise other people's voting. So yes, we are a bit concerned, and there's been some pretty inflammatory talk from some people, I would say, on the Trump side. So let's hope that is misplaced. Let's hope that's a kind of game being played and not a real threat. So on the other question, on what does it mean in the United Kingdom and so on, it's no secret that Boris Johnson has felt a certain affinity with Donald Trump. There are certain similarities between the two personalities, their approach to politics, their approach to the desire for applause and so on. And I think that they have got on extremely well. It's not the case that there's a relationship between Vice President.
Ladies and gentlemen, I want to put stop on profit for both positions, Euro USD, United States dollar, at 1:16.65. 67. Yeah, I will put to 1:16.67. Stop on profit. So if the price will reach this level, I will sell my both positions on euro against dollar. As you can see, I have 1:16.34 and another position. I will just point out on my chart at 1:16.79. Okay, so I'm placing as well stop at this level. Let's wait and see.
China has had a very good run. China has had very good terms of trade. We've treated it as a developing country with all sorts of advantages in terms of how it can trade with the rest of the world. But actually, it's not a developing country, and it's beginning to eat the lunch of working people in many different countries. I think that's become a pretty bipartisan issue. It's become an issue in Europe, which believes strongly in free trade. It's become an issue across the divide in America. So my guess is that a President Biden would also take a pretty firm line with China, but would probably not do so in the kind of unilateralist way. And he won't be doing a policy of let's have lots of tariffs, because tariffs on the whole simply mean that prices for American consumers for things that they need go up. I think he will want to work with allies on ways of engaging with China rather than doing this all by himself.
Peter Westmacott, when you look at some of the things that could change under a Joe Biden administration, is it energy, is it technology, and is it something else domestically?
Energy policy, I suspect, will be a bit different. Of course, we've had Biden saying whatever Trump says, I'm not going to ban fracking, but he and other Democrats have been nervous about aspects of that. And he's also said we need to transition away from fossil fuels, which frankly I think is a responsible approach to take, although it doesn't always go down well in some of those key battleground states which are strong on fossil fuels, coal, oil, and gas. But I think there would be a change of emphasis, and I think that would be very welcome. More generally, my guess is that President Biden will be saying to himself, we're not just going to reset the calendar as if 4 years of Donald Trump had never happened. We're going to have to address a lot of the issues that have left tens of millions of Americans feeling abandoned, left behind, ignored. And what are we going to do to address those concerns? That's partly about policy towards China. It's partly about stimulus. It's partly about recovery. And of course, it's partly about how you address the COVID issue. And he has been beating up very hard on the president about his approach to COVID in America, along with Britain, I'm sorry to say, has been suffering pretty badly, and governments have been a bit slow off the mark with some of the palliative measures that they need to be taking. But I think that will be a high priority. But I would have thought that President Biden will really want to address the concerns of many of the people who voted for Donald Trump and who he will want to vote for himself or whoever Democrat it is next time around, in this very difficult situation where so many middle-class incomes have been stagnant for the last decade or so, and people are feeling pretty unhappy. Foreign policy, there are a number of issues which will be a bit different. I think he'll have a different approach to Russia, which will be closer to that of the United Kingdom. We've talked about China. I think on the Middle East, you'll see that President Biden will be different. He will be, I think, firmer on Saudi Arabia on human rights issues. He might want to stand up to some of the issues that are going on in Turkey, a country that he knows very well, but he's been worried, and he said so, about some of the things that have been happening in terms of freedom of speech and human rights and so on in Turkey. So in different parts of the world, I think there will be a different approach. And in many of it, I think he will find that he's more closely aligned with Europeans than President Trump has been. He certainly won't, for example, be talking about taking America out of NATO, which would be a very reassuring change of emphasis for Europeans.
Thank you so much for joining us today. Peter Westmacott there, former UK ambassador to the US and Chatham House senior advisor. Now, coming up, we'll have plenty more, of course, on the US election. It's voting day today, and we'll start having coverage throughout the day, and then starting at midnight London time, we'll really ramp it up. We'll be live from DC and across the United States with the latest, all of the market action as well. Now, coming up, investors, are they positioned? How are they positioned as we head into election day? We'll focus on what the outcomes, including the possibility of a disputed result, mean for investors. John Norman from JP Morgan joins us next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
I am moving stop on profit for my first position at 116.79 to 116.81. Okay? Stop on profit moved to this level. Sorry, I need to put again the price I purchased, 116.79. Okay, so let's move on.
Political maniacs that you're dealing with, or do you want to be ruled by the American people?
Now let's focus on what the election means for the markets. In less than 5.5 hours, Wall Street opens for its election day session, with futures pointing to a positive start to trading. Markets broadly positioned for a Biden win, but investors are alert to the possibility that polls could be wrong again, or that we could see the disruption of a contested result. Well, joining us now is John Normand, head of cross-asset fundamental strategy at JP Morgan. John, perfect day to speak to you. I have a million questions. First of all, what exactly are we looking at? Because at a national level, sure, Joe Biden is pretty far ahead of Donald Trump, but if you look at the electoral map, it could be very tight.
Right. I think we're looking at an election that favors a Democratic sweep, but it's definitely not fully convincing and conclusive, because the margins have been narrowing somewhat in the national polls. Some of these Senate races are not as wide in terms of favoring the Democrat as people would like to see if they are biased towards a sweep. So there's always the wild card risk over the next 24 hours or 48 hours probably.
I am also moving my stop on profit for another euro position at 116.34 to 116.70. Yeah. Okay. That's it. It will be nice profit for both positions.
And there's definitely at least the view that Biden will be the president, even if he won't be backed by a Democratic Senate. I think that's one of the reasons why Asian assets have been leading for several weeks. This means Asian currencies and Asian equities. So certainly clients are invested for the idea of a Biden win. They're a little less completely invested in the idea of a Democratic sweep, but nonetheless, that's what the position data are suggesting right now.
John Normand, how are you expecting the evening to pan out? So once the polls close in the U.S., and I've been reading a number of press articles, including Axios, saying, we could initially see a red sweep because votes that are in person are counted more quickly, and then we get the mail-in orders that could be more lenient towards the Democrats. Is this a scenario that that markets should be aware of?
Well, I think clients are generally aware of how fluid the aftermath of the election will be. So even though we refer to this as election day, traditionally, a lot of clients have been referring to this more as an election week. I don't think people expect any kind of finality in the next 24 hours. They recognize that there are differences in the postal vote versus the in-person vote in different states. They realize that some important swing states like Pennsylvania are not going to be even starting counting the postal votes until election day. So this could go on for 2, 3, maybe more days. But I think that's also the reason why, even if clients have a bias towards a certain outcome, like a sweep, they're not fully positioned for it. They realize there are uncertainties. They realize that the shape of the race is going to evolve as these different states deliver their results. And they're more likely to position more fully only after something is made official. So there is going to be follow through if you get a sweep outcome. I think clients have been keeping some exposure in reserve, feeling like the situation is going to really oscillate over the next couple of days.
What happens, John Normand, if we don't actually have a election result this week, if we don't have for the next 2 weeks? Do markets just sell off because we're expecting social unrest, or can you find havens in this kind of scenario?
No, I don't think they sell off instinctively just because there's no official result. It could be a number of days, maybe it's a couple of weeks until there's an official result. But I would distinguish between an unofficial result and a highly suggestive result. So if there's a result which is highly suggestive of a sweep that emerges in the next couple of days, and yet those results are not yet official because some votes are being challenged in particular states, I think as long as the margins are big enough in a range of swing states, I think the markets will trade with what the unofficial news is. So, really the more problematic scenario is where even the unofficial results are highly unclear whether or not this will be a Biden victory versus a Trump victory, and whether or not this will be a sweep versus a non-sweep. If anyone feels like that is just too fluid a situation to position, I think some of the traditional havens, are the ones to go with. I think you want to be in some of these non-dollar assets like the Japanese yen. I think because the Treasury market has actually sold off this month, you could see a move lower in Treasury yields, a rally in Treasuries, which maybe people had given up on as a haven trade. So there are some options here, just which are very level dependent. I'd favor the yen. I'd favor Treasuries.
John, thank you so much. John Norman there from JP Morgan stays with us, and we'll come back to John shortly. We'll look at some of the emerging market, and also we'll focus really on currencies. Now, coming up with the U.S. election on the horizon, what do the results mean for European assets? We discuss that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. It's U.S. election day. Let's look at the markets. Now, stock markets actually climbing for a second day, along with U.S. futures, hours before the American presidential election. Now, currency traders are really bracing for a bit of volatility. I'm also looking at treasuries slipping along with a gauge of the dollar, and then a measure of expected swings in China's currency rising to the highest in more than 9 years. Again, traders, I guess, hedging against a volatile yuan after the U.S. election. I'm also looking at sterling jumping as...
Moving up my stop on profit for 116.79 order to 116.84. Okay. Stop on profit move to this level.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. It is election day over in the U.S. The latest polls show Democratic nominee Joe Biden is leading President Trump nationally, as well as in some key states. The Biden campaign says the surge in early voting will help the Democrats. But Trump's team argues voters heading to the ballot box today can easily wipe out that early advantage. Now, OPEC Plus is inching closer to delaying its January output hike. Russia is actively discussing keeping its current curbs for an extra 3 months. As oil markets weaken, the group has been dropping hints for weeks that its plan to add almost 2 million barrels a day may not be such a good idea. And Australia's central bank is cutting its key rate, its yield curve target, and its bank lending facility. It is also announcing a new bond buying program worth 100 billion Aussie dollars. That says it seeks to ensure a rapid recovery from the pandemic and Australia's first recession in almost last 30 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Francine.
Leanne, thank you so much. Now, COVID cases are surging across Europe. France reported record daily infections, while Italy is drafting a new tiered system to limit the spread of the virus. Now, in Britain, the Prime Minister Boris Johnson said there's no alternative to a lockdown and unveiled plans for whole cities to be tested. Well, joining us from Brussels now is Bloomberg's Maria Tadeo. Maria, great to have you on the program. Europe's finance ministers meet virtually today. How downbeat will they sound about the economy and the spread of infections?
Right. Good morning, Francine. Well, if they sound anything that Christine Lagarde did last week, they are going to sound very downbeat. Remember, she said the risks to the European economy are now very much tilted to the downside. There is no visibility in terms of the virus going forward, and those restrictions are becoming much more structural for the European economy. Now, there are two issues that are probably going to dominate the debate between finance ministers today. They have to do with the extent of the economic damage. They were hoping to see a rebound in the third quarter that would extend to the final quarter of the year, but of course that is not going to happen now. And really the tension here is whether or not we do see a double dip recession taking hold in Europe. The other issue has to do with stimulus, the idea that perhaps all we need to do is just implement what we have already, the recovery fund, the European budget. The talks there are still very much blocked by the European Parliament, or whether we need more firepower to be included into that recovery fund. So there's two issues here with regards to the economic damage that's already being done, but the economic damage that could be done in the future if the lockdowns continue across Europe, but also how to deal with those two issues going forward, considering this is a crisis that is probably going to be extended beyond 2020, now full into 2021.
Maria, thank you so much. Our Maria Tadeo there in Brussels, of course, covering all of that for us. Let's get back to the markets and let's get back to John Normand from JP Morgan. John, the concern is that actually it's going to be very difficult unless we get massive fiscal stimulus in Europe for us to get out of this economic doldrum because of a second wave of infections and this lockdown. What does it mean for where you want to put your money?
Well, my preference would still be in either the U.S. markets or the East Asian markets. The U.S. markets, because I'm biased towards a sweep and I'm biased towards big stimulus, and I think that as a catalyst is very important for helping the U.S. Recover some of the outperformance that it used to have prior to a couple of months ago. And I'm also biased towards Asia because they seem to have been much better at preventing a second wave from ever materializing. So if you think in terms of who's likely to get more fiscal stimulus soon and in size, it seems like the U.S. Who's better at managing COVID, it seems East Asia. Those are the markets that I would prefer right now. I think the only European market that you might prefer in a relative sense versus other parts of the world could be credit. I think it's important that the ECB has already flagged that they'll be implementing some policy changes at the December meeting. That could mean a faster pace of asset purchases. It could mean a different composition of asset purchases, more towards credit. And I think that puts those markets in a unique position. I don't think that's enough to make the equity markets outperform the non-European equity markets, but I do think it is important in the credit context.
John, what happens if you look at some of the European, the other European equity markets? Are you concerned that the ECB just doesn't have enough tools or firepower to fix whatever is coming our way?
Yes, I think that should always be a concern because I think everyone realizes that rates are at such a low level in Europe that leads to a reluctance to cut the policy rate even further into negative territory. B, the corporate bond markets in Europe are not nearly as large relative to the size of the economy as they are in the States. So the stimulative impact of those sorts of measures is less than it would be in the U.S. So I wouldn't say they're out of ammunition. I would just say the bullets don't fly very far. This means that, of course, the fiscal measures have to be the ones that really are going to drive the recovery. The good news is that the Europeans seem to have been very quick about extending some of the worker and corporate support programs that they first premiered in the spring. That's all good news. But if you're looking for what's really going to be the catalyst for Europe to outperform, I think it has to be some easing of the lockdowns and the return to growth. I think it's still too early in this sort of virus cycle to think about Europe outperforming just because the ECB seems willing to ease, or just because some of the fiscal policies are operating in the background. I think you need to see a rollover in the case count and some reasonable expectation that restrictions on activity could start to be eased in the next month or 6 weeks.
John, give me a sense of when you look at some of the currencies that you're most worried about, and we talked a bit about volatility because of the U.S. election. What do you do with emerging market currencies?
Mm-hmm. I think you break them into probably 2 or 3 buckets. I think there's the high conviction bullish category, which is East Asia. And this is around some of the things we talked about in terms of Asia's ability to manage second waves. That gives much more visibility on growth and also on corporate earnings. And that drives equity performance and relative currency performance. I think there's a second basket of currencies that have reasonably high real interest rates, moderate domestic imbalances, and those are going to be go-tos if the global inflation story gets back on track. That to me is Mexico and Russia. And I think there's still that third bucket of kind of no-go currencies where it's not really clear how the domestic imbalances around fiscal policy or indebtedness are going to be managed. And this is Brazil, South Africa, Turkey. I don't believe whatever happens in U.S. politics is enough of a swing factor in terms of the direction of those currencies. I think domestic fundamentals are much more important. So those are still ones to avoid. So it's a very similar list to way I think people have been thinking about EM over the past 5 or 6 months. But I think the message here is there's no reason to rethink the framework. There's still certainly a pecking order of EMs that clients would want to be exposed to and should be comfortable with, versus there's still a list of cheaper currencies where the domestic fundamentals don't really support a rebound yet.
John, where do you see if there's a sell-off? Is it all asset classes at once? What do you do with havens? What do you do with, if you look at Swissy, if you look at yen, if you look at gold, is there any value to be played there?
So I think if there's a sell-off in markets for whatever reason, whether it's more COVID cases in Europe or the U.S., whether it's lockdown restrictions in the U.S., whether it's disappointment in the election outcome and therefore the prospects of fiscal stimulus, I do think you're going to have a 2 or 3 tier market. Probably equity is going to be hurt the most because they don't have a direct central bank backstop. I think credit is going to be much more stable than it usually is, as stable as it was in September in the face of equity drawdowns, because you do have central bank asset purchases, which are quite geared towards credit markets in Europe and in the U.S. in a way that they maybe weren't before. And then you have the EM currencies, which are probably the most exposed as well because of the lack of sovereign support for a number of these. So that's why I would think about the risky market complex. The havens is always a tricky question because given the low level of rates, there's a limited degree to which bonds can rally. U.S. Treasuries, I think, could rally a bit more in November than they could in September because we're starting from a slightly higher level of rates, but I think maybe 10 or 15 basis points is the maximum there. And Swiss and yen, I think, are still traditional safe haven currencies that work well on a forward-looking basis, simply because the main reason they benefit is the current account surpluses those countries enjoy and the use of Swiss and yen as funding currencies into higher yield assets. So nothing about the structural drivers of those as safe havens has changed, and that's why I think those are still worth holding if you have a sort of a dim outlook on which way the global economy is going to go over the next couple of months.
John, it's 9:40 a.m. in London. I haven't asked you about pound, and I have not asked you about Bank of England or Brexit. So what's your take on, first, whether we have a Brexit deal, like we seem to be inching closer and finding an agreement on fisheries, and what does it mean for negative rates in the UK, the second lockdown?
So I assume there'll be a deal because there seem to be some mutual incentives towards that. The bigger question is it a meaningful deal that has any kind of material economic impact? And my view is that it won't be a material deal. It won't be something that boosts growth. It simply is going to be a deal that is less of a drag on growth than what a hard Brexit would imply. So when you think about the disruption that causes to British businesses, when you overlay that concurrently with the stress which is being imposed by lockdowns, it's a done deal that the Bank of England is going to ease more. I tend to think they're going to go more for the asset purchases than the negative rates because there aren't as many negative side effects from upsizing the asset purchases. Unfortunately, the Bank of England is in a similar position to the ECB in that the corporate market is not as large as corporate markets are in the U.S., so there's not that much stimulus that comes from buying more corporate assets. bond yields on the govy side are already at such low levels. There's going to be a lot of stimulus from that. So it's better than nothing. I think that stimulus is going to move the pound slightly lower because it simply widens a monetary policy divide between the Bank of England and some other central banks. But I can't really see the bullish case for sterling, even under that sort of narrow deal scenario. I think it's going to be a chronic underperformer because of where monetary policy is, because of the external imbalance, i.e. the current account deficit, and because of these uncertainties around how the economy is going to cope in 2021 under a limited Brexit sort of deal.
John, thank you so much. John Norman there from JP Morgan. Of course, he stayed with us, and we'll have plenty more throughout the day on the U.S. election and on the Eurogroup presidency. Now, he is head of cross-asset fundamental strategy at JP Morgan. Coming up, a vote of confidence in an unconventional manager, while Jack Dorsey keeps his job at Twitter. We'll bring you that story next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. On to some of the tech stocks that we're watching. And Jack Dorsey is keeping his job as Twitter chief executive after a review of the social giant's leadership and management structure. Well, let's get more on this to discuss, of course, tech, Twitter, but also what a new president, if Joe Biden goes to the White House, means for technology stocks. To join us to discuss this is Bloomberg opinion columnist Alex Webb. Alex, great to speak to you today. What did we learn about the Twitter management yesterday?
So there had been a review of Jack Dorsey's leadership of Twitter. This was since the activist fund Elliott, the Paul Singer's activist fund, took a stake at the start of the year. And for now, at least, they have given him a vote of confidence. Now, there's a big caveat to this. It does risk being something of a stay of execution. They have advised some changes in the governance of the company, not least in the term length for the board members, and also have asked for a CEO succession plan to be put in place. So it seems as though, that might provide some scope for Elliott to push for further changes at board level, which would then, of course, make it easier to push for replacement of Dorsey at some point down the line, should they
Alex, how much of a difference will it make if we have, President Biden in the White House? Does that mean that we're going to get a lot more regulation, possibly even a breakup of a lot of these technology giants?
I'm so sorry, you broke off a little bit there. I'm desperately sorry. Could you repeat
I think we're having some technical difficulty. Alex, I don't know if you can hear me. What I was asking is, if there was a Democratic president in the White House, are we going to see a breakup of a lot of these technology stocks?
It's far from a sure thing. The difficulty is that the proposals made by the House subcommittee last month largely seem to come from the Democratic side of the caucus, and that there were objections from the Republicans. Now, with Democratic control of the Senate, which is a possibility, I think that would be the element which would make a breakup more likely, but it's still got a long way to go, and it would, I think, be partly dependent on what emanates from the DOJ and indeed FTC investigations into Google and Facebook, because if they manage to make some progress, then the sort of appetite for legislative change, which would really be about forcing some sort of breakup, I think could be diminished. One heavy caveat, of course, is that Kamala Harris is seen as being quite close to big tech. Don't forget, California is her home state. She's quite close friends with some of the top executives of these companies, and so the extent to which it becomes part of her remit rather than Joe Biden's, if they prove to be the winners, this time tomorrow or this time next week, whenever it might be, then that will be an important factor.
Alex, thank you so much. Our Bloomberg opinion columnist, Alex Webb, they're covering technology for us. Now, this is what the markets are doing ahead of the day of voting. Remember, though, in the U.S., more than 100 million voters have already sent in their ballots, so it's a little bit different this year. Still, today is U.S. Election Day in the U.S., and at the moment, stocks rallying for a second day, along with U.S. futures before the American presidential election. Currency traders really bracing for some increased volatility. I'm not seeing VIX elevated for the moment, but we'll have a look at what happens the rest of the day. Treasuries slipping, and then I want to show you also some of the defensive shares. So they seem to have lagged. Currency markets, again, looking for signals that will have some post-poll swings, and then we're seeing banks leading up thanks to BNP Paribas. Dollar dropping. Coming up, a battleground blitz. Trump and Biden head into the home stretch for the White House race, with more than 98 million Americans already voting. All of the latest from the campaign trail next. This is Bloomberg.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
climate change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Ladies and gentlemen, I am moving my position. I got from 116.34 stop to 116.84. So I want to sell my two positions at one price, 116.84.
A corrupt politician.
It's time for Donald Trump to pack his bags and go home.
This election comes down to a very simple choice. Do you want to be ruled by the corrupt and selfless political maniacs that you're dealing with, or do you want to be ruled by the American people?
Well, millions of Americans head to the polls today, but with a massive turnout expected and an avalanche of mail-in ballots to process, election night has the potential to end in anything from an early landslide to a drawn-out brawl that carries into next year. Joining us now is Kathleen Hunter, our U.S. politics editor. Kathleen, first of all, what are the swing states that you'll be watching out for, and how many of them could be called early?
Well, I think that, Pennsylvania really tops the list. That is shaping up to perhaps be the biggest prize tonight. We saw the candidates both spend a lot of time there. There's already been some litigation related to ballots in Pennsylvania. And they have a high number of electoral votes, so that's definitely one to watch. Another one to watch closely, I'd say, would be Florida, which of course was the site of the Bush-Gore drawn-out dispute in 2000, 20 years ago. And that has always been a pretty hotly contested state, and one that's been decided in recent elections by pretty narrow margins. So that also is a very populous state, so carries a number of electoral votes. Beyond that, sort of next tier, I'd say, would be, North Carolina, Arizona, Nevada, potentially. The battleground is quite large. Michigan, of course, Wisconsin. So there's a lot of states that could be really decisive.
Why does Joe Biden think the early voting surge, Kathleen, gives him an inside track, and how is President Trump fighting back?
Well, there's some indication that the number, because we don't know, of course, how the people who requested early ballots, how they voted, but we do know in some cases what their party affiliation is, and we've seen a much higher rate of early ballot requests coming from Democrats, which I think partly goes to explaining why we've heard from Trump, a lot of claims that aren't backed up by evidence that mail-in balloting is rife with voter fraud. And so I think there's a concern out there that potentially Trump could challenge those ballots, and that in many states those ballots won't be counted until later.
Kathleen, when you look at the argument that it could take days to count the results, I mean days or even weeks or a month at this point, how worried are different sides that this will also lead to social unrest?
Well, I think that's a big concern, and certainly something that differentiates this election from, certainly any that I can remember is, we're seeing in urban centers like New York and Washington, we're seeing businesses being boarded up following the unrest that we saw over the summer with the police brutality protests. And I think there's a real sense that this election could be different that way, that, we could see one or both sides, coming to the streets to protest the results or protest how the results are being handled. And I think that's going to be something we're going to have to watch closely in the coming days. Hopefully it doesn't materialize, but I think there are some indications that it very well could.
Kathleen, thank you so much for your time today. Bloomberg's U.S. politics editor, Kathleen Hunter, there joining us. Now, don't miss, of course, our full coverage of the election starting at midnight London, although before midnight, we'll also have a full day's coverage of the markets and, of course, some of the polls out there. Now, we'll be live from D.C. and across the U.S. with the latest and all of the market action as well. This election a bit different to what we hear in Europe because we can still talk about the polls even on election day. Bloomberg surveillance, of course, continues in the next hour. Tom Keene joins me out of New York. I'm looking at stocks rallying for a second day. U.S. futures also up before the American presidential election. Currency traders, though, bracing for increased volatility. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Markets in a bullish mood on U.S. Election Day. Almost 100 million Americans have voted already, and turnout is expected to challenge historic records. Euro area finance ministers discuss COVID-19 as France sees record cases. Italy lays out fresh plans to halt the spread. Chancellor Merkel urges people to follow the rules. And the corporates come in thick and fast. BNP Paribas paints an optimistic picture despite the pandemic. S&P says the virus is an inflection point for clients. Well, good morning, everyone. Happy U.S. Election Day. This is Bloomberg Surveillance. As always, Tom and Francine from London and New York. Tom, It's exciting. Today is a big day. We'll look at the dynamics in all of the swing states. I guess two things we need to focus on. First of all, if there's a Biden presidency, what it means for crucial policy differences. I would point to energy, I would point to tech, and of course I would point to stimulus. And on the other hand, we need to look at polling and whether what we have right is right for our international audience. It's not about the national polls, it's your electoral college that we need to focus on, Tom.
Well, not only electoral college, but the new gridlock that could appear. There's 4 or 5 outcomes by the time David Weston gets to election results on the West Coast tonight. Francine, there's any number of ways to slice it. My opening comment for the next 30 hours, Francine, is simple. We've seen this before. This is part of America, a deeply divided America. There is nothing new about that. What is new is the social media, the cable TV concentration, the emotion in your face. It used to not be that way. Maybe we can all get comfort by Dixville Notch and Milford, New Hampshire, where they voted early, probably without TikTok or Twitter.
Yeah, I'm not sure, Tom. When's the last time, though, we talked about a not-so-peaceful transition of power in the U.S.? This is something that, to me, feels fairly new. We talk about possible social unrest in the U.S. So we look at that. I was speaking to a senior banker yesterday at one of the large Swiss banks, and he was saying, look, the trading floor is fully prepared overnight to see, whatever happens, they're prepared. And it could be, if there's a big surprise, it could be difficult to find haven. So we'll do extra market checks today. Now, Yep.
Well, I just was going to say with the Dow, the S&P 500 up 45 points, Francine, you are correct. It is tangible to worry about this election day and the outcome tonight and over the next number of days.
Yeah, and unclear, Tom, frankly, to me, what exactly is priced in right now. Let's get straight to the Bloomberg. First, we're news in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, there's never been an election day like this one. Almost 100 million Americans have already cast their ballots, and they did so in the midst of a pandemic that has killed more than 230,000 people here. President Trump and Joe Biden capped their bitter campaign with a push through states critical to deciding the outcome. The president said Biden is not mentally equipped for the office. Biden called the president a disgrace. 2 small New Hampshire communities that traditionally vote just after midnight have already tallied their ballots in the presidential election. It was a clean sweep for Joe Biden in Dixville Notch. He won the town's 5 votes. In Millsfield, a slightly larger town, President Trump won 16 of the 21 votes. In Vienna, authorities say the gunman who killed 4 people was an Austrian North Macedonian dual national who had a previous terror conviction. The suspect was killed by police, and it's not clear if he was acting alone, but police made a number of arrests in raids this morning. In addition to other fatalities, another 17 people were wounded in the attacks. Authorities say shots were fired at 6 different locations. And Prime Minister Boris Johnson says there's no alternative to imposing a coronavirus lockdown across England. Johnson revealed plans for entire cities to be tested to root out asymptomatic carriers of the disease. Lawmakers from Johnson's own Conservative Party raised concerns about civil liberties and mental health. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Oh, Ritika, thanks so much. The data check here, and yes, the data matters even on an election day. Let's look at it 2 days in a row up. I'm not going to pontificate about the why of that in politics. Futures up 43, Dow futures up 400 points. Back out over 27,000 on the Dow. 27,215 is a level of futures on the Dow. VIX comes in. Remember, we were at 40. Maybe even 41, can't remember that data point. 35.81 in a full stick right now. Yields show higher, 0.87%, 3 basis point move on the 10-year benchmark. In currency markets, dollar finally ebbs away from strong dollar, 93.66 on DXY. On the currency pairs, not all that much going on. Even Swiss franc backs up a little bit, weaker Swiss franc. Francine?
Yeah, Tom, I have to say, investors probably beginning the week trying to reflect on a bit more optimism following weeks of speculation that a contested election outcome may produce no clear winner for some time. So I'm not 100% sure what's priced in, but if you look at polls, They continue telling us that Democratic nominee Joe Biden is ahead, though the race remains very tight, and you can see this being priced in possibly on the market. So the VIX is not even elevated. I'm looking at pound simply because it's currency volatility. That could happen, so we're on watch if anything happens for currency markets, as traders are bracing for these post-poll swings. And then in Europe, I'm actually looking at, so markets are up, and it's really the banks, including BNP Paribas, leading this rally in European bank shares because they were a little bit more optimistic about the future, Tom.
Well, our goal here across the many hours of this election coverage and into the following days is to give you good conversation. We're going to do that. We're going to start strong with Greg Valliere, but first, the conversation of the two candidates.
Almost 100 million have voted so far. 100 million voted already, and more are going to vote today.
A vote for Biden is a vote to eradicate your auto industry.
My message is simple. The power to change the country is in your hands. Tomorrow, we can put an end to a president who has fanned the flames of hate all across this country.
I'm running against a very sleepy guy. We can't let the sleepy guy fool us, though, because he happens to be a corrupt politician.
It's time for Donald Trump to pack his bags and go home.
This election comes down to a very simple choice. Do you want to be ruled by the corrupt and selfless political maniacs that you're dealing with, or do you want to be ruled by the American people?
Interesting conversations there on the final dash. Most of that, I believe, in Pennsylvania, maybe the president there from North Carolina as well. We start strong. Gregory Valliere is from New Hampshire. He is with AGF Investments, but that barely describes decades of experience in the winners and the losers of our democratic process. He writes a must-read morning note, read worldwide and particularly inside the Beltway. He's up way too early, but that's because he wanted to be the sixth voter at Dixville Notch. Greg, for our international audience, explain that you drive out of Boston, you go up the Connecticut River through White River Junction and the rest of it, and then you go north towards your ancestors in Canada. Where in God's name is Dixville Notch?
It's way up in the north and in the mountains. It gets notoriety once every 4 years, so they now have 4 years to go before anyone talks about them again.
Maybe we'll take Francine up to the Balsam so she can see autumn at its beauty in New England. Greg Valliere, what will you watch for at 7 p.m. tonight? We see the first results. David Weston will bring them to us. What will you look for at 7 p.m.?
Just the size of the Trump win in Indiana and Kentucky, that will be interesting. Is Mitch McConnell in trouble? I doubt it very much. Tom, this is going to take several days before it's resolved. Several days of recounts, of litigation. In fact, it could be several weeks of litigation before we get this answered.
There are benchmarks, Greg, that you and I have studied for years. One of them is Vigo County on the western edge of Indiana, Terre Haute, Indiana, which has voted right since 1956. They've got it wrong twice, folks, since 1902. Do those themes, do those certitudes matter in this election, or are we going into this evening blind?
I think we're going into the evening blind. I think a lot of the old rules have been thrown out. I do think that we'll wake up tomorrow morning not knowing for sure what happened in Pennsylvania. Maybe by Friday we'll know, and then the lawsuits start, and they'll go on for weeks.
So, Greg, if you had to make a prediction, what would you be expecting? First, what would you be expecting in terms of when the final outcome will be known, and who do you expect to be in the White House?
Okay, so I'm saying a light blue wave, not a tidal blue wave that some people are talking about. I think Biden will win narrowly. Maybe he'll get around 300 electoral votes. He'll easily win the popular vote by 5, 6, 7 million votes. The more intriguing story for many in the markets is the Senate. And I think the Democrats could gain Senate control by 1 seat or maybe even in a tie. That is not a blue wave. I think the Democrats need more senators to get their agenda through, and I don't see that happening tonight.
Greg, going back to the fact that you don't see Pennsylvania called until Friday morning, what happens in the immediate aftermath of the vote? Are we going to see social unrest? I have to say, as a foreigner, it's pretty shocking to think about, a transition of power that could not be smooth in the U.S., that could lead actually to rioting in the streets?
Well, first of all, we could see a pretty good night for the Republicans because so many Democrats have already voted. I think of that nearly 100 million voters, 60, 70% have voted for Biden. But we get the makeup tonight. Beyond that, I have to tell both of you, in driving through downtown D.C. yesterday, the whole city is boarded up. They're preparing for riots.
Greg, help me with the Senate races. I think one of our first looks is the gentleman from South Carolina. We'll see what Mr. Graham can do. And then there are the two races in Georgia. On the East Coast, do you get a flavor of the Senate early, or am I going to have to wait and wait and wait till Cirilli wakes up and leads our coverage?
You may have to wait until January 4th when you have Georgia runoffs. It could take that long. So just as 2020 breaks all the rules, I think it's possible the Senate could wind up a tie broken by the Democrats. But again, I don't see a tidal wave for the Democrats in the Senate.
Well, Greg Valliere with us, and we're thrilled that he can continue with us for a generous half hour. We'll talk more policy and more outcomes here with Mr. Valliere in a moment. Our coverage 2020, the presidential election. Look for that tonight. David Weston, really excited about what we've put together, which is conversation and perspective away from the hyperbole. Speaking of that, he is a Democrat. The doctor, Howard Dean, will join us, a former DNC chairman. I believe he's voting Biden. Dr. Dean will join us here at 6:30, an important conversation on how the Democrats will lead if and only if Mr. Biden takes the trophy. Stay with us this election day. Worldwide, this is Bloomberg.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, happy election day. We delve further into the polls. We look at state by state. And of course, we were having a great conversation with Greg Valliere, AGF Investment Chief, U.S. Policy Strategist. Greg, we talked a little bit about the fact that you're expecting a light blue wave, if I said it correctly, and the fact that you could actually see a lot of states not being able to tell us who won in their electoral college until Friday at the earliest. Greg, when you look at the national polls, what are we missing?
Well, I'd say two things. Number one, COVID, as Donald Trump says. That's such a huge factor. A lot of people, especially senior citizens, resent his treatment of this. The other thing that's not well publicized, Francine, is what's happened to the poll takers themselves. They have changed their methodology to include more non-college educated white men. In other words, Trump supporters. They've increased their weighting of Trump supporters. So my hunch is the polls are not going to be off by as much this time as they were 4 years ago.
What can you tell us about the biggest surprise that would come under a Biden administration? Is it technology? Is it the energy landscape in the U.S.? Is it China, or is it stimulus?
First of all, it'll be stimulus. If we don't get a Pelosi-Mnuchin deal, and it looks quite unlikely, a stimulus right away. I think the real surprise for the markets is that Biden might not go for big tax increases right away. I think he might worry the economy's fragile. He might not want to antagonize the markets. We'll get tax hikes, but they could come later rather than sooner.
You know, Greg, I look at a lot of Americans, both sides of the aisle, who out of this election are saying they're going to move abroad. You've threatened to move to New Hampshire, which in itself is frightening. Greg Villiers, I want you to define gridlock now. I mean, on a prisoner's dilemma, there's 4 boxes that we can come up with, but define the gridlock you see in March of 2021.
Yeah, that gridlock is that there aren't enough Democrats in the Senate to get any of Biden's agenda done. And then they all face a really tough decision. Do they vote to kill the filibuster rule? I think Biden is inherently opposed to it, but he might agree. So gridlock, I think, would lead to some institutional changes in the Senate.
Okay, well, let's cut to the chase here right now. What is your reading of guys like Wasserman at the Cook Political Report and the other true experts on all this mathiness? Is there a legitimate shot at a Democratic Senate?
Oh, yeah. I think they have a chance to gain the Senate in a tie, 50-50, maybe by 1 seat, maybe by 2. But is that enough? Is 2 seats in the Senate enough for the Democrats? Yep.
Well, this is critical, Greg, because Hans Nichols at Axios published Sunday night that it's so tenuous in the Senate that Mr. Biden will keep the senator from Massachusetts and the senator from Vermont in the Senate for Senate stability and not push them, but keep them out of his cabinet. Is that where we're heading? What does the progressive left do with that?
Fully agree, Tom. Do you want to elevate Elizabeth Warren to Treasury Secretary when the loss of her seat could change the entire Senate makeup? So I think she stays in the Senate. I think Bernie stays in the Senate, not in the cabinet.
Okay, so what would the cabinet look like, Greg?
Very diverse, far more diverse than this one, obviously. I think the focus in our industry is obviously going to be on the Treasury Department, and there's a very brilliant, highly respected woman at the Fed, Lael Brainard. I think she is the odds-on favorite to become Treasury Secretary.
Greg, what does that mean for stimulus? How quickly? So let's say, I don't know if you can call, let's say we have a president in the next 2 weeks, right? For the sake of all of this polling and all this uncertainty, but that it's called in the next 2 weeks. How quickly, after January, could we actually have a real stimulus package?
Unfortunately, because I think we really need a stimulus right away, it could be February before we get a stimulus bill done. It could be a big one, $2 trillion, maybe even $3 trillion. I think Biden will get it. He can use this arcane provision called reconciliation. But we need stimulus now, and I think we're still 3 months away.
Does a Biden presidency, if he becomes elected, change the way the U.S. deals with lockdowns?
Yes, I think that he will listen to Dr. Fauci. I think that we'll have social distancing. We'll certainly have much tougher regulations on masks. I don't see the country locking down like much of Europe has, but Fauci plays a much bigger role in a Biden administration.
Greg, thank you so much. Great to come. Dear Greg Villiers with us from Dixville Notch, New Hampshire this morning, where he was with us and could not vote. I'm kidding, folks. Greg Villiers from Washington with AGF as well. Martin Walsh knows where Dixville Notch is. No doubt he has been there because he is the mayor of the city of Boston. This is a timely conversation with a gentleman watching the election results, a gentleman looking at the legislative dynamics beneath the presidential radar. Martin Walsh in the 8 o'clock hour. Please stay with us. Futures up 48. The VIX over a stick, 35.77. It is election day. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ruchika Gupta with your Bloomberg Business Flash. Saudi Aramco says third quarter profit fell 45% from a year ago. The world's largest oil producer was hurt by lower crude prices and smaller sales volumes. Still, results suggest the worst of the coronavirus pandemic's impact on energy demand may have passed. A board committee at Twitter has concluded that CEO Jack Dorsey should stay in the job. The panel was asked to review Twitter's leadership as part of an agreement with activist investor Elliott Management and private equity firm Silver Lake. Both took stakes in Twitter earlier this year. SAP's CEO is trying to put a positive spin on the company's slowing revenue growth. Christian Klein tells Bloomberg TV that more clients are transitioning to cloud computing products. The German software giant lost a third of its value following a forecast that alarmed investors. And that's your latest Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. It's a surveillance HP-12C. Mr. Xi and Xinhua just report that China will double its economic output in the next 15 years. So we go to the surveillance, HP12C, and the number, Francine, is 4.73% GDP growth per year. Francine, that sounds doable, right?
I mean, it sounds doable if, as long as the rest of the world doesn't, go through a massive downturn, Tom. Yeah. It's something that could be possible. I have to say, it will certainly have an effect of tempering, volatility in renminbi that we saw because of the U.S. election. So I think the timing of this is actually quite interesting. And again, Tom, Xinhua citing the explanation of this 5-year plan.
And what's great, I'll be quick on the data because Francine's got other data, is, what's so important here is Sarah Vellis over at Deutsche Bank just comes out with an EM angle, Biden versus Trump. And basically it's Biden go long EM, Trump go short EM. That's the quick parsing of George Saravellis' work at Deutsche Bank. Francine?
Yeah, and we have to look at emerging markets, for example, such as Mexican peso, but certainly it's currency markets that's signaling that traders are bracing for this post-poll swing. So stocks rallying at the moment. It's a second day of gains. U.S. futures also up. Currency traders bracing for increased volatility, but I'm looking at European mining shares. They're up. Banks in Europe up as well. Coming up next, we speak with Jeffrey Yu, BNY Mellon Senior Strategist. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I
just have to begin this conversation by using the word uncertainty.
I am very worried about the prospect of, if there is a contested election, especially widespread unrest.
What I'm most worried about is come January 20th, there's still no clear picture as to who the president of the United States is.
Reality will start to set in, I think, if President Trump wins, and I think that the market will be far less enthusiastic after the initial pop.
Certainly there's been record-breaking turnout in a lot of places. Texas, it comes to mind. Whether this guarantees a Biden victory or not, I think is anybody's guess, and it's a fool's errand to try.
From election to election, the difference isn't so much of people changing their minds in the middle of the poll, it's who decides to turn out.
Divided government, Biden in the White House without the Senate means that getting even emergency stimulus through in January is going to be very tough. And this country is going to need it.
There's not really an exit ramp for either side here. The stakes are so high that when we wake up on Wednesday, or potentially much further along if we don't know the results quickly, around half the country is going to find this to be an existential threat.
Some of our guests there weighing in on the U.S. election uncertainty. Now, to talk a lot more about the markets, uncertainty, and also havens, where you find them, joining us today is Jeffrey Yu. He's BNY Mellon Senior Strategist for EMEA Markets. Jeffrey, first of all, are you pulling an all-nighter in case, the poll swings and there's something ugly overnight? This is probably the #1 question on every single trading floor. How do you deal with the night ahead?
Firstly, hoping to get 2 or 3 hours between putting the children to bed and when the polls close. Yes, and we'll want to focus to try to follow through. And the important thing is to see how quickly can we get a result, because that will make the difference between a volatile night and a less volatile night. So we'll see what happens.
Yeah, and Jeffrey, what's priced in at the moment? So if we see volatility, is it because it's an unexpected outcome? Or is it because it just gets delayed and we have civil unrest?
I think what's being priced in is actually a clear outcome, or relatively comfort with the notion that there will be a clear outcome, right? So if I look at dollar yen, if I look at dollar Swiss, these traditional safe haven, risk on, risk off proxies, I think that's what the FX market at the very least is saying. We won't have prolonged uncertainty. So I think that's the big short-term risk. And if it is going to be an uncertain outcome, then these positions really need to shuffle around a bit.
Jeff, I want to ask you about interior Minnesota politics off of your time at Carleton College, but we'll avoid that. I don't think BNY Mellon wants you to do the punditry act. But I will ask you about where we are 6 months in a year out with what is distinctive this time, which is the debt buildup worldwide. We've seen it everywhere. The debt and the deficit, as Hal Bronner would say, in the U.S. is extraordinary. How does that change your calculus beyond this election?
The debt buildup itself is expected. The question is, how do you fund the debt? So for countries around the world right now, for central banks, can they fund their debt with relatively low real rates? Look at what Australia did overnight, right? So they're making the bet with a big stimulus coming up ahead. They can fund it with relatively low real rates. But the question for the US and the dollar is, can the US do that? And I think that's where the calculus changes. If real rates start to move higher, loss of Fed credibility, funding costs go up, growth might be constrained. That's a problem for the dollar.
The equation here, and I think the mathematics gentleman, again from Carleton, can get this, is the nominal yield less the inflation expectation equals the residual, which is that inflation adjusted or real yield. Jeff Yu, what is your take on the catalyst to a higher real yield, a more injurious real yield? What's the thing that makes it go?
Well, the thing that makes it go, again, is markets start to demand a premium, because when you have a fiscal stimulus come through, it needs to be a credible path towards tightening that output gap as quickly as you can, and then start to generate sustainable inflation. If we start to see bad growth or supply constraints here or there, then markets want to be compensated for that, so they're going to want higher nominal yields as well. So even if inflation rises, so inflation will rise with growth, but if there's higher compensation for nominal yields, then there's going to be a problem. So it's not just about growth and inflation, it's about credible, sustainable growth and inflation. So that's where, no matter who does a stimulus up ahead, that's what markets are going to be looking for. And I think in the US right now, the jury is still going to be out there.
But Jeffrey, how much of a stimulus package do we get under Biden presidency as opposed to under a second-term Trump presidency. And I know it all depends on the Senate as well, but what's more supportive for the markets?
So again, going back to the point about what can generate good and sustainable growth, and I think there is a view out there that with a Biden presidency or after a blue wave, you might get more state-level support, so a higher stimulus, a larger size, but the scope is going to be wider as well. But also, is this the right type of stimulus to actually boost productivity? Growth at the end of the day, sustainable growth, you need to boost productivity. This is where if you get a stimulus that pours money into infrastructure, into green technologies, it's what China is trying to do, then that may be credible as well. So let's see the process, when it's out there. But again, it's not about size, it's about composition. Can there be a stimulus that generates productivity? So let's see what the plans are up ahead. Right now, I guess the Democrats, they are saying the right things, but the proof is going to be in the pudding.
Jeffrey, what happens to volatility, first of all, into the exit polls tonight and in the next couple of days?
Right. So firstly, I think the balance of risk is higher volatility. As I said earlier, right now into the night, I think markets are pricing a clear-cut result. So if it's anything less than a clear-cut result, then volatility is going to rise. And then the next phase is how long is this volatility is going to be? Is it, okay, we wait until the next morning, wait 12 hours, which is what happened in 2004 when some stations waited to call Ohio, for Bush rather than Kerry, then it's manageable. If we're looking at days and then weeks, then it's going to be a different equation altogether, because bearing in mind, the longer the uncertainty, the more the stimulus talk is going to be delayed. People are going to worry about growth again.
Jeffrey, thanks so much. Jeffrey Yu there of BNY Mellon stays with us. We'll talk a lot more about some of the emerging markets, of course, on the back of the U.S. election. We'll talk about dollar dynamics as well. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. President Trump and Joe Biden have brought their bitter campaign to an end. They spent the final day rallying support in states crucial to deciding the outcome. Almost 100 million Americans have already voted. Biden is seen to have the upper hand with leads in national and most swing state polls. President Trump's counting on heavy turnout by his supporters today. A federal appeals court has denied a request by Texas Republicans to ban drive-through voting today in the state's most populous county. The Republicans said they wanted to prevent election violations. The court denied the request without an explanation. Reported coronavirus cases have hit an all-time high in the U.S., and hospitalizations have risen in 44 states. Battleground states in the elections are facing their worst moments of the pandemic. Wisconsin posted America's third highest cases per capita in the past week. 7-day average cases are at records in Michigan and Iowa. And Hurricane Eta has strengthened into one of the Atlantic's most powerful storms of the year. It's roaring towards Central America with winds of 150 miles an hour. The Category 4 storm is expected to cause flash floods and life-threatening storm surges when it slams into Nicaragua today. Global News, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Greatly appreciate it. Futures advance a bit here, up 47 right now. Coming up tonight, our 2020 election coverage. Lawrence Summers joins. Yes, the former Treasury Secretary, the gentleman from Harvard, Lawrence Summers, on the fiscal and the monetary path forward for this political nation. This election day, stay with us. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Good morning, everyone. Bloomberg Surveillance. This election day, we welcome all of you worldwide in early morning America. Francine Lacroix in London. I'm Tom Keene in New York. There's a ton of other news out there, but yes, we're focused today on America and this election. Our coverage beginning at 7 p.m. Tonight, but really through the entire day. What we have is smart conversation, and Jeffrey Yu leads with that in synthesizing and pulling in together the strands of equities, bonds, currencies, and commodities. He is at and adds advantage to BNY Mellon. Jeffrey Yu, I want to talk about currency as litmus paper, and the dynamic here is without question dollar. There are some of those that question the future of the dollar. Ray Dalio was on the other day talking up renminbi down the road as some form of, I'm thinking of just staying exorbitant privilege to the renminbi as well. Do you buy it, or does the dollar reign supreme?
So the answer is always somewhere in between. The dollar will be very, very difficult to displace as a dominant reserve currency, and it will almost certainly for the foreseeable future be the dominant international financial currency in terms of transactions. I mean, you just look at the Chinese commercial banks engaged in dollar lending right now. That says it all, right? But it doesn't mean that there can't be any alternatives, any proper alternatives. Renminbi is obviously one of the best candidates there, and China wants to take it slow as well. About 20 minutes ago, with release of the next 5-year plan, they called for prudent, stable internationalization.
Come on, Jeff, I just did the math on the old HP-12C. I'm sure you used one at Carlton. It's 4.7% per year for 15 years to double the economy. 4.73% is not a big reach, is it?
Well, the fundamental issue here is, does China want the rest of the world to own the renminbi? Does China want the rest of the world to start owning Chinese government bonds in the same way the rest of the world owns treasuries? They haven't figured that out themselves. If the rest of the world owns it, they can sell it, right? So will that kind of volatility, which China's never really used to, will they welcome that? So it's going to be a slow and steady process. So an alternative, absolutely. We are heading towards a multipolar world, but the dollar is going to be around for some time as well. So let's not discount that.
Jeffrey, on renminbi, first of all, how much does it swing right after the election, depending on the outcome or what the exit polls tell us? And how quickly can China and renminbi actually become a true reserve currency?
So the knee-jerk reaction is, let's just say if Trump actually surprises and wins, I think there might be a lot of renminbi longs out there which are going to be taken off. And that's where I probably will take stock and say maybe it's a good entry level. And the reason is, China's own plan is it's leaving globalization behind. No matter what the outcome of this election is, the plan is about focusing on the internal economy, focusing on domestic demand. So, that's where the difference will be made. But then over the next 5 to 10 to 15 years, and I'm actually leaning more towards 5 to 10 years, renminbi usage, overseas ownership of Chinese assets and bonds, just look at recent IPOs, for example, that will rise. Allow it to move organically. China should not force the issue, which seems like they've tried to do with internationalization in the past, but now it's going to be more of a hybrid step and let it grow organically. So everything in between, but I wouldn't knee-jerk sell the renminbi aggressively on the back of whatever happens today.
Jeffrey, are we too optimistic actually about China? One of the questions that came up also in the IMF annual report, and that's coming up now with what we're hearing from President Xi, is that the Chinese economy is great, but it's still very dependent on worldwide consumption. So if we have more infections, more lockdowns in Europe, the US, and the rest of the world, then this will automatically impact China negatively.
So, China is well aware that it is still exposed to global demand, and I think that's why they are accelerating their investment plans to boost domestic consumption. So, yes, they are at risk still of, let's say, the global economy being stagnant, but also I think we need to realize the bigger risk is domestically, demographics. There's a big census going on right now. I'm not sure if the results, would be, let's say, good reading. So they need to focus on their own productivity, on their own potential growth, and that's the bigger challenge up ahead.
Jeff, one final question, and I'm sure you'll never come on again after this question. What's your equity view? The zeitgeist is we move to value, we move to small cap, we move to international, and EM does better. What's the Jeff view on the stock market?
I think rotation, is going to be the mantra, whether it's away from growth and towards value. That's many false starts for that over the last 12 to 18 months. That's going to be in play. But ultimately, I think it's about pro-productivity rather than pro-growth. Both sides of the same coin. But again, infrastructure versus tech, things like that. If the stimulus up ahead, if investment is going to head towards productivity, those are the areas I want to be in. I think with green and infrastructure and also new technologies, that's going to be the focus, not just in the US, but globally as well.
Jeffrey, thanks so much. Jeffrey Yu there, BNY Mellon Senior Strategist for EMEA Markets. Now, coming up, we'll talk a lot more about the lockdowns in Europe. We'll talk about the recovery fund, when it comes and who it will go to. Coming up in the next hour, Pascal Donohoe, the Irish finance minister and Eurogroup president. This on the day the Eurogroup actually meets. So that's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Apple will start to end its 15-year relationship with Intel next week. That's when new Mac computers are revealed. These Macs will have main processors designed by Apple for the first time. They'll replace Intel chips, which have been a mainstay since 2006. Shares of PayPal are falling today. The company lowered its full-year revenue forecast. Plus, it said growth in the third quarter slowed from the blistering pace of the first half of the year. PayPal has been a big winner in the pandemic. Shares were up more than 70% in 2020 before today. Buyers' legal bills have to contain the fallout over the weed killer Roundup as they keep rising. The German company now expects the costs of handling future lawsuits to rise from about $1.2 billion to $2 billion. Bayer says it's far enough along with U.S. plaintiffs' attorneys to realize the expense will be higher than it anticipated in June. And that's your Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. It is a presidential election, but always there is the House of Representatives each and every 2 years, every single chair up for grabs. And then there's a Senate where 1/3 of the Senate does every 2 years. So over a 6-year term, they rotate through one time each, two, and two. Jack Fitzpatrick can do the math. He's our Bloomberg government reporter. Jack, the Guardian does the numbers, and they come up with 35 races. They say 7 are close. And there's that whole thing of lean and toss-up. Is it going to be Senator Majority Leader McConnell, Senate Majority Leader Schumer? And which races are those two looking at?
Well, if you look at the polls, Democrats are feeling really good. Obviously, they remember 2016 when some of the polls in key states were wrong. But if Joe Biden at the top of the ticket has the strength that Democrats think he does, and he wins, they also expect to have the Senate coming their way, even if it's with very narrow numbers. Now, Doug Jones, the Democrat in Alabama, is probably going to lose, meaning Democrats have to pick up 4 seats overall. But Colorado, Arizona, and Maine are looking good for Democrats, very bad for Republican incumbents. And then you've got a number of races, 2 in Georgia, 1 in Iowa. Montana's pretty close. North Carolina's very close. South Carolina is competitive, where if they pick up one of any of those, that would get them at least to 50-50 with a tiebreaker in the vice presidency.
Jack, measure the coattails.
The key states are looking good for Biden, or at least very, very competitive for Biden. In some cases, the down ballot Democrats are actually outperforming him. Arizona, Mark Kelly is probably consistently a little ahead of Joe Biden. It's possible to see Democrats pick up that Senate seat and Biden actually lose the state. There are a number of moderates who are performing well, probably helped by the Biden candidacy. They don't have to respond to, attacks against somebody like Bernie Sanders, but also who are doing quite well on their own.
Jack, should we worry about the polls being wrong in certain swing states, or the polls changing at the last minute?
It's possible that they could be wrong. I am not saying that this is absolutely done and that the cake is baked. One state to really look closely at, of course, is Pennsylvania. I just checked. The Real Clear Politics polling average is a 2.6% lead for Joe Biden. In 2016, the polls were off and Donald Trump overperformed by exactly that amount. And that is clearly a pivotal state. But overall, across the country, really the polls would have to be at least a little bit more wrong than they were in 2016 in many states for Trump to have a clear path to victory.
Jack, we've been looking at all these pictures, especially coming in from Washington, D.C., of shops of really every nature trying to board up in case we saw civil unrest and riots. Who are we thinking would riot and take to the streets?
Yeah, a lot of places being boarded up in D.C., even a little outside of downtown. I think the long-standing expectation has been, looking at the way things went in D.C. This summer, that if, for example, Biden were to win the popular vote but lose the Electoral College, that could cause some concerns. I'm not sure it's concerns with a specific outcome as much as things have been pretty crazy in D.C. for much of the year, and so it's probably fair to expect that that people the anxiety boils over in some way.
I mean, Jack, you mentioned Mr. Biden's coattails. Does the president have coattails? Does Ms. Ernst want the president's active support in Iowa or not?
Typically, yes. People like Joni Ernst, a number of these members, including even Martha McSally, who has appeared to be behind in Arizona, have wanted Trump's help. There was an incident a few days ago during a rally when Trump actually was a bit dismissive of Martha McSally and didn't really give her the time that a lot of Republicans wanted to speak at the event. If you're in on the Trump presidency, then you're in for a penny or you're in for a pound. There are not many members who don't want his help, even if his current standing in the polls hasn't helped them so far.
Jack Fitzpatrick, thank you so much. Greatly, greatly appreciated this morning. Let me do a data check here. Futures ebb away a little bit, up 40. Dow futures up 390. The VIX is stick in at 36.02. That really gets my attention, showing the 2 days in a row we've seen a market lift here. Yields, well, 3 basis points, 0.87%. We'll have to watch the dynamics in the fixed income market. 71 basis points on 2-10 spread. I should note Turkish lira beyond ugly out to 8.49. That is a ginormous weakness in lira over the last 4 or 5 days. In our next hour, on the state of America, the state of future investment, Edward Hyman. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
What is happening today in India is actually a determination
to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
This morning, this election day, it is evident that people do care. 98 million have voted. Coast to coast, long lines are anticipated. Dixville Notch goes Biden, while 12 miles to the New Hampshire south, Millsfield says Trump. There is a pandemic. There is deep economic anxiety. This America is cities, suburbs, and farmland inseparable. There is a Fed meeting tomorrow, and then Jobs Day. They can wait. And still, it is a pandemic. Dr. Fauci says after the election, look for a, quote, whole lot of hurt. Good morning, everyone. Bloomberg Surveillance from New York, from London, Francine Lacroix and Tom Keene on an election day in America that will redound around the world. Francine, what's it look like from London? What does this election look like from across the Atlantic?
Well, first of all, Tom, there's a number of UK newspapers actually looking at how much your U.S. election cost. I mean, numbers that, of course, here we don't have because of rules that limit the amount of money that can be spent in a campaign. That would be the first point. The second point, everyone around the world is really waiting with bated breath. It's the biggest show on earth because it's, of course, to elect the most powerful man that will, stem economics, it will impact foreign policy, and it will impact certainly trade relations, for example, between the UK Prime Minister and whoever the President of the US is. So I have to say there's a lot more appetite to try and understand this election, especially if some of the polls in 2016 were wrong. So on tenterhooks, Tom, is really what we're seeing here in London, both from people in the street to markets to what we're seeing in the newspapers.
I really like that, Francine. The appetite is strong, and that's the way it is in America, too. The interest, folks, of 98 million early voters, however you want to count them, is extraordinary. As Greg Vallier said in our last hour, the idea here is it's different than 2016, that just perhaps the pollsters have adjusted after the embarrassment of 4 years ago. With our first word news on this election day, here's Ritika Gupta.
Morning, Tom, Francine, and there's never been an election day like this one. Almost 100 million Americans have already cast their ballots, and they did so in the midst of a pandemic that has killed more than 230,000 people here. President Trump and Joe Biden capped their bitter campaign with a push through states critical to deciding the outcome. The president said Biden is not mentally equipped for the office, and Biden called the president a disgrace. Two small New Hampshire communities that traditionally vote just after midnight have already tallied their ballots in the presidential election. It was a clean sweep for Joe Biden in Dixville Notch. He won the town's 5 votes. In Millsfield, a slightly larger town, President Trump won 16 of the 21 votes. In Vienna, authorities say the gunman who killed 4 people was an Austrian North Macedonian dual national who had a previous terror conviction. The suspect was killed by police, and it's not clear if he was acting alone. But police made a number of arrests in raids this morning. In addition to the fatalities, another 17 people were wounded in the attacks. Authorities say shots were fired at 6 different locations. And Prime Minister Boris Johnson says there's no alternative to imposing a coronavirus lockdown across England. Johnson revealed plans for entire cities to be tested to root out asymptomatic carriers of the disease. Lawmakers from Johnson's own Conservative Party raised concerns about civil liberties and mental health. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Let me look at the data right now. 2 days in a row, a lift to the markets. We were up a little more earlier, but right now an elevated 42 points. Dow futures up 415. The VIX comes in a full stick, 35.95. To watch that closely. An ebbing of the angst that we saw last week. I haven't done much on foreign exchange. Dollar comes in weaker. Yen 104.72 like a rock. Euro does a little better off the carnage of last week, 116.96 as well. I know Turkish lira continued to stress 8.49. Francine, what do you see?
So, Tom, I'm actually seeing, a day of gains for the moment. Traders, again, hedging against prospect of a post-election volatility in currencies from Britain's pound to the yuan. So I want to show you a pound also given what we're seeing with the second lockdown in the UK. Measure of expected swing is also in China's currency, holding close to its highest in more than 9 years. I had VIX, I had, some of the gainers here in Europe are, for example, mining stocks, but also banks. And then gold. Gold's not doing much, Tom. And the question is, if we do have a surprise in the polls or actually, postponement or, very unsettling markets, it's what do you buy? What's a haven right now? If we have a huge sell-off across asset classes, the only way to go would be to cash. And we've been trying to call around, trading floors to see what their central expectation is.
Yeah, it's interesting on gold, like a rock here for the most part over the last number of days. Right now joining us, we've got any number of conversations going on. Isaac Botansky is with Compass Point out of Ohio Wesleyan. He's someone with a real grasp of the policy dynamics, but also when that will click in. We're thrilled that he could join us this morning. First, though, let us listen to the candidates.
Almost 100 million have voted so far. 100 million voted already, and more are going to vote today.
A vote for Biden is a vote to eradicate your auto industry.
My message is simple. The power to change the country is in your hands. Tomorrow, we can put an end to a president who has fanned the flames of hate all across this country.
I'm running against a very sleepy guy. We can't let the sleepy guy fool us, though, because he happens to be a corrupt politician.
It's time for Donald Trump to pack his bags and go home.
This election comes down to a very simple choice. Do you want to be ruled by the corrupt and selfless political maniacs that you're dealing with, or do you want to be ruled by the American people?
The two candidates speaking here, and I was wrong earlier. I thought the president there in North Carolina. I was incorrect, of course, in Grand Rapids, Michigan. Joining us now, Isaac Botansky with Compass Point Research. Thrilled he could join us on short notice this morning. Isaac, I want you to dovetail your experience with TARP, with the Capitol Hill dance, with the delay we're going to see in Senate races. Okay, I got to be careful here. Not everyone, but almost everyone wants stimulus. Isaac, how can we have stimulus if we don't know the makeup of the Senate?
So I think when we consider stimulus, any optimism about action in the lame duck is misplaced. I think that there's going to be this fog of disdain and distrust in D.C. during the lame duck, and that means that investors and those who need the help are going to have to wait until the first quarter of next year.
When the first quarter of next year appears, and obviously there'll be an outcome, and I don't want to do the punditry on that, but we've got to get through a Pennsylvania count, and you highlight in your research note the double Georgia count that Francine's been focused on. When does Georgia know who their two senators are?
Yeah, we're all so focused on the top of the ticket, and that makes sense given the implications, but it's very important for investors to recognize that we may have to wait for the margin and even who is in control of this Senate until January of next year. There's runoff rules in the state of Georgia that will push that race, if it's needed, to January 5th of 2021. So I think we're going to know who the president is this week, but there's a very decent chance that we don't know who's in control of the Senate until next year.
But Isaac, if we don't have a stimulus package in the U.S., I mean, many people will suffer. Many people out there won't be able to pay the rent and things like that. So, is there not a general, realization that something needs to be done before the first quarter of 2021?
This is one of those issues where I think there's broad agreement conceptually in D.C. It reminds me of infrastructure spending. Everyone in D.C. agrees that there needs to be infrastructure spending, but no one agrees on how to pay for it. In this instance, everyone in D.C. agrees that there needs to be more fiscal stimulus. But the gravitational pull of the election has made it incredibly difficult to navigate before today. And I think that things will be messy in December, which means that I'm looking to January of next year. And most of my client conversations focus on stimulus now. And I think that reminds me of that old adage, don't fight the Fed. Well, a lot of my clients are saying you can't fight what could possibly be trillions of dollars of fiscal stimulus coming early in 2021.
Isaac, what are the markets pricing in right now? So if you look at volatility, it's not that elevated. We're looking to a very uncertain election. Are they pricing in a Biden presidency and a Senate that also goes Democrat, or are they on the fence?
It's actually tough for me to tell because I think that it's going to be a long day. I think that we will get some signals of where the race is going tonight. So I can point to counties in North Carolina in that research triangle and get a feel for how suburban voters are tilting. And I think we'll know Florida tonight, which is a very meaningful mile marker. But we're probably going to have to wait until the end of the week to get the real numbers from all the mail-in ballots in Pennsylvania, which is the key to this key to this race. So I think that there's actually a little bit more uncertainty ahead than the market is pricing in. But my sense is the focus from most market participants right now is the potential for that big fiscal package shortly after this election.
Very good. Isaac Boltanski, thank you so much. Greatly appreciate that this morning. Futures up 44, Dow futures up 434. And again, our election coverage tonight at 7 p.m., election 2020. A lot of good voices lined up there to give perspective as we see results, maybe a touch before 6, but on to the 7 o'clock hour and very much beyond. Stay with us. This is Bloomberg.